To find your chart, you come on product. From product, you go to super chart. Ne? This is where you find the charts, product, super chart. Yeah, and then from here you move to the upper right corner. Ne? This is where you find your favorite instrument or the instruments that you trade. If there is an instrument you wish to add on the list, you can simply go on the plus sign, the add symbol. You add the symbol. It looks quite complicated, but it's the best actually for analysis. TradingView is best for analysis, and then MT5, the ones that we already installed, it's best for trading. So we are going to use TradingView for analysis, and we use MT5 for trading or to take the entry. So if you see here, green. And then let's quickly start with technical analysis. What is technical analysis? Technical analysis is the kind of trading where you use price action, what is happening in the market, specifically where you use candlesticks, for example, to make your trading decision, where you use historical price data to make your trading decision. This is the kind of analysis where you use what happened before to make your trading decision. The first thing that you're going to find in technical analysis, most famous and commonly used, is what's known as supports and resistance. Okay. You learn the website as I'll progress. Support and resistance, it's used in trading to identify the level where the price will possibly reverse or where the price will possibly continue from. Okay. For example, let's say in life, the price usually goes up and down. Ne? Let's say the price will usually go up and down. It will go up, then come down. It will go up again, then down. It will go until there. It will come. It fluctuates ne? Until there. And then just like in life, when someone is supporting you, that person wants you to progress in life. That person wants you to prosper in life. That person wants you to be a better person in life. So it's the same with support and resistance. Support and resistance, or support, are those something that I'm getting here. Let me use the TradingView pen. Okay. When someone is supporting you in life, that person wants you to be a better person. Support levels are this area where the price is usually being sent up. For example, when the price reached here, it was sent to go up. It was being supported. When the price reached here, it was being supported. When the price reached here, it was being supported. It was sent up. The area whereby if the price was going down, when it reaches that certain level, the price stops to go down and it starts to go up. So those areas are known as support areas. I want to remove this tool. Okay. Are known as support areas. Ne? So this it's a support area. So at the bottom, they are known as supports where the price reversed. At the top, it's resistance where the price is being rejected to the level where the price has been sent down. These are known as resistance. So on a chart, if we can move here on a chart, you can simply find supports and resistance. Why am I still there, dragging up and down? Oh, sorry. Okay. On the chart, if you are to drag down, you can simply identify the areas where the price is being supported. For example, this area, it's a support area. That is a resistance. This, when the price reached here, it bounced up. It's a support. That's a resistance. This is a resistance. That is a support. That is a support. That is a support. So you can clearly see this area. If I'm to show you here, if I'm to bring you here, you can easily identify where are the resistance, where are the support. Let me test you if you understand. What area is this one?
Support.
Support.
This one?
Resistance.
Resistance.
This one?
Resistance.
This one?
Support.
Okay.
Support.
Before we move forward, do you understand what are support and resistance?
Yes.
Okay, good. These are very, very, very basic things. We'll move to the advanced things later. Okay, now the next thing that we move is what is known as trend lines. Trend line is, let's say the price moves up and down in this manner. Usually it goes up, it comes down. It will go up, it will come down. It will go up like this. And then usually this trend line, you can take a vertical line, a tool that you find on your trading view on MT5. It's already there. Ne? This tool is already on MT5. You pick this, it's a trend line. This is a horizontal line. You can simply pick a trend line. Ne? This one. You join these previous lines that you have. Let's say you join the previous two support. Then you extend it until somewhere here. Ne? Then when you're extending it like this, I want to drop this thing. Okay. When you're extending it like this, this thing is troubling me. Okay. When you're extending it like this, our expectation is, since when the price reached here, it went up. Ne? When it retraced and bounced to this line again, when it came to this line, ne? It went up again. You see that? It went up again. Our expectation is when the price will reach this level, we are expecting this level to act as a support, ne? For the price to go up again. So as a trader, you will be looking for this level to look for buying opportunity. So when you draw, when the price will be here, you'll be like, okay, if the price will get here, I am going to wait for a green candle. If you have to bring in candlestick, I am going to wait for a green candle to give me a sign, maybe a bullish engulfing, to give me a sign that buyers are taking control. Buyers are taking control. When you see a price reaching here, you expect it to have as a support. Then you bring in your green candle, your engulfing candle. After you see a green candle, what do? You buy, and then what do you do after you buy? You buy, then you tell your broker using stop loss. That is another thing that we will cover. I don't think we covered it, but we'll get back to it. You tell your broker, like, I am buying, but if you see the price reaching here, I only want to lose a $10, maybe here. That is known as setting stop loss. We'll learn that later. And then if you see that the price is going up, take me out here in profit maybe of a $30. So, but why did we buy here? We bought because of this trend line. We expected it to respect this level as a support. And why did we buy again? We bought after we saw a green candle, which is an engulfing candle, what we have learned. Is it clear for this moment on what we have covered? Are you okay?
I think so.
Okay, good. If you're okay, then let's progress. We'll start over. We look at, so this kind of trend line, this one, the diagonal one, it's known as the vertical one. It's known as what, a diagonal trend line or whatever you can call it. And then you also have a vertical, no, a horizontal trend line, which is like this. So sometimes the market goes up and down like this. It will go up, come back to the same level. It will go up again, come back to the same level, and then it will go up. So what you do when you realize this kind of behavior is you are going to set, this is like your interesting area. You will wait for the price to come here, then you look for buying opportunity going up. Sometimes the price will go up, then come down like this, in this manner, in a diagonal manner. What you expect is you expect the price to come here, then you buy again. The opposite also holds when the price is going down. The price can go down in this manner. It can go up, down, up, down. So you will draw a trend line expecting the price to come back. Drawing trend line is very simple. You take a line, you connect it at the tip of this previous resistance. You connect it at the tip of the second resistance. When the price is here, you expect the price to come and touch this line for the third time, then you look for selling opportunity. This is what are known as trend lines. So on the market, if we are to move to the chart, let me try to remove, what did I draw with? Maybe I drew with, okay. If we are to move to the chart, if you see here, let me switch to the 4-hour time frame. Okay. Can you see what is happening here, for example? Okay. It can be here. The price was coming from here. It went down, then it pushed up, went down again, pushed up, went down, pushed up, went down, pushed up, went down, pushed up, it went down, then pushed up again, it went down. So you as a trader, if you are using supports and resistance concept, you could take a trend line here. Where is the trend line? Here. If you are to connect these 2 points, then you extend it. Can you see what is happening just at that moment? So what you have to do is, this is just a quick example for easy understanding. It's not that easy as it looks. If you have to connect this and this, the third time the price came here, you were going to look for selling opportunity. What do we have here? What we have here is, if we are to zoom in, this is that area. Let's try to zoom in. Can you see? I'm struggling to do the drawings and writings with TradingView, okay? And Zoom at the same time, but hope you are following. This is the area of interest. Can you see what happened here? We got this, like you could be here waiting, but if the price will get here, I am going to sell. But what will you wait for? You'll wait for the price to get here, then give you a red candle. So after that, what happened? It gave us a hammer. Can you see this? After we saw a hammer, this was a sign that the price is about to be hammered to go down. You are going to click a sell in this area, and then the price went down. That is just a quick example of what we have learned. When we talk about analysis, this is what we look at. This is what we do actually when we analyze. So this is it's not that complicated. And then we move to, so this line that we are putting here, this line, it's known as a trend line. It can be on top, it can also be at the bottom. The line that connects supports and resistance, it's called what? Trend line. And then we move to what is known as breakout. What then happens if you are expecting the price to respect your trend line? You are expecting the price when it reaches here, you want it to sell, but instead, when it reaches here, it does not sell, it keeps buying. So that kind of situation, when the price violates your level that you're expecting it to sell or that you're expecting it to buy, when it does not respect it, you call it a breakout. You call it what?
Breakout.
What is a breakout?
When the price doesn't respect your
buying.
Okay, good. Okay, this one, is it a support or it's a resistance?
Resistance.
Okay, good.
resistance.
Since it's a resistance, you will expect the price to go down, But if the price reaches here and it does not go down, we call it did what?
It's a breakdown, that one.
It's a breakout, out, like in and out, break out. So it broke out.
Okay.
Are we fine?
Yes.
And then when you have a breakout as a support, the price will proceed. But if the price comes back to this level, what was previously known as a resistance will turn into a support. What we mean is, if you have a breakout, when the price comes back here, you will expect it to respect this level, but in an opposite manner. First, you expected it to go down, and then it broke out. This time around, we are expecting it to come back to this level, but in an opposite manner. Instead of selling, we are expecting it to buy, to go up. So meaning, what was previously known as a support, as a resistance, after a breakout, it becomes a support. Is it clear then?
Yes.
Okay, let's have a quick example in the charts where we had breakouts, for example. Let's try to see if we can find a breakout here. We didn't go far. This is a breakout that we have here. You can see what we have here is this. This is a support. This is a support. What you could have done is you could draw a straight line here to connect those supports and resistance level. You could put a line there connecting the supports and resistance. When the price was coming here, it respected. There now, here, it respected again. No, we expected it to respect. But what happened? It did what?
Get out.
Yes. Breakout, past tense is broke out. It broke out. It broke out. Then after breaking out, what happened now? When the price came back here, it didn't go far. It respected it, instead of respecting it as a support, it was now being respected as a resistance. It went down. When it came back here again, what happened? It now, this line that was previously known as a support, after this breakout, it became what?
Resistance.
It became a resistance. Now, you as a trader, what you do is, you will see that, okay, this is a support. What you do is you don't buy immediately when the price will reach here. That is where our candlestick comes in. Ne? If you were to identify this as a support, you identify this as a support. When price comes back here, you don't press a buy immediately after you see that the price have landed where you wanted it. You wait for a green candle to form, a candlestick. Ne? If we were to wait, there was no green candle that formed. There was just a straight red, it broke out. You could have stayed away safe, knowing that no. This is a very strong red candle. Sellers are very powerful. I am not going to sell. Now you could come here, wait for a retest. After it reaches this retest, you don't sell immediately. You wait for a red candle. Like now, we got a red candle. You could have sold after that red candle. We are combining the candlesticks and the trend lines to make our trading decision. What we are doing right now is we are analyzing. And then those that pays for signals, or the signals that we send out in the group, this is how we generate the signals. We just sit on the computer, we wait for a breakout, we wait for a retest, we wait for a red candle, we tell you, Maria, sell, John, buy. So this is how we generate the signal. And if you have done the right thing to enroll for mentorship, we are going to teach you how we get the signals. Okay. Maybe I'm also going to teach others moving forward. These are the very basics. We are going to get to advanced things at a later stage. Okay. We then move to what we know as Forex indicators. Ne? Forex indicators. What are indicators? Indicators are tools, are mathematical tools that we use to help us make our trading decisions. Or before we move to indicators, we have questions on breakouts and support and resistance. Questions on that? Are we good? Yeah, okay, right? Okay. Okay. We now move to what is known as indicators. Indicators are tools that we use to help us make trading decisions. We use it to supplement the breakouts and the candlesticks, not so actively being used, but yes, I want you to learn about them and know about them. Let me show you, for example, okay. The first tool that we'll look at is what is known as stochastic indicators. There's a way you can add it on MT5, but for trading view, you can simply add your tool by using this table that you have on the left. If you are not sure, you can just go in there, you check what you have there. Like for now, I'm looking for a stochastic indicator, or you can also come here in the indicators list. Then you can search. Let's say we are searching for stochastic here. We can select it, and then they can, we don't want two, we only want one. Let's remove one. Okay. Okay, we have removed one to make life easy. What this tool does is it tries to pinpoint the same concept. It tries to pinpoint the level of support and resistance. If you are here, for example, let's say you're on H4. This tool uses percentages. Like at the bottom here, you usually have 20%, and then up here it's an 80%. It's a 20% here, and then up there it's 80%. Okay. What we are expecting is we believe in Forex that the market always corrects itself. What do we mean by that? That if the prices have been selling, it will run out of sellers, and then it should correct itself to an equilibrium. What's the correct pronunciation? Equilibrium level. And then when the sellers will run out, we call it oversold. And then the buyers will take over. The market will not have sellers, only buyers left. When the buyers comes in, they will push the price up until they also run out of buyers. And then what happens? It recorrects itself, it corrects itself. The buyers will run out, we call it overbought. Then it will start to sell again. So this level that the price is turning back, it's called what? Those levels are called?
Overbought.
No.
Support and resistance.
Very good. The price, the level where the price is being sent up and down, they are known as support and resistance. Okay. Now with that, we want the RSI, its function is to try to pinpoint the level where the market is overbought. After it's overbought, buyers are running out and sellers will start to take control. The idea of a stochastic is to look for the overbought levels where buyers are running out and sellers are about to take control. At that level, you look for selling opportunity, and that is still the same resistance level, which is redefined. The stochastic indicator tries to look for resistance level for you in advance. And when it comes here, it tries to identify using percentages the level where the market is overbought and the buyers are about to take control. So you start to look for buying opportunity at that level. And those are overbought levels, and those are support levels. The stochastic indicator uses percentages. It believes that the price is supposed to be between 20, this is 20%, and 80%. If the price gets below 80%, it's in trouble. Sellers about to run out, buyers about to take control. You go and look for buying opportunities. Are we fine? I'm being very, very slow, so you understand very well. Someone asked, are we going to do the lessons in 2 days only? No, we are not going to rush anything. We'll be very slow. We'll just try to be consistent to show up every day. Okay. Then the indicator, what it does is it identifies this level. When you see the price here, you should start to look for, is it selling or buying opportunity in this level?
Selling opportunity.
Selling. Are these support or resistance level?
Resistance.
Yes. When the price
resistance.
gets here, you start to look for buying or selling opportunity.
Selling of just
When the price reaches here, you start to look for buying or selling opportunities.
buying
Okay.
opportunity.
Yeah. So that is what the the stochastic indicator does. It tries to look for those levels where the price is overbought and oversold. Sometimes it works, sometimes it does not work. For example, if you look at history, how it have happened, can you see here? If we are to go up, trying to match where the price was, you can even use a vertical line to match that. You can use a vertical line in this manner. Here, can you see when the price was here? It did not start to sell immediately until we got a red candle. So if we were to combine the stochastic and the candlesticks, we could make a good combination. And when the price was here, can you see? It started to warn us that it was here. It did not buy, here it did not buy, here it did not buy. It kept warning us until here, it started to buy. You see, when the price was here again, same story, but it did not sell. When the price was here, can you see? It started to give us warning here, way too early, but we could be in trouble if we're to buy. That is the problem. You never know when exactly will it start to buy. It starts to give you warning, maybe 5 hours in advance, but that is too early. And then that is where you have to bring in your candlesticks. If we're to consider this warning starting here, are you seeing the warning I'm referring to? The oversold level, it started to warn us that the market is oversold here. Can you see that? Can we see that the market went below 20 at this level? Are we following, guys? Are we there?
Yes.
Yeah.
It went below 20 at that level, and then it started to warn us again. But the candlesticks that we got here, they are very small. Can you see that? That they are very small, isn't it?
Which makes it.
Can you see that? And last week we learned that candles that are very, very small, they show weakness. Candles that are very big, they show power. You could wait, you got a warning from the stochastic, you could wait until you see a green powerful candle, and the green powerful candle was here. Can you see that? It's even a bullish engulfing. So after you got that candle and a warning from stochastic, you could have bought at that level and price went up. So that is how you use stochastic in combination of the candlestick. You can also combine support. If there's a stochastic, there's a support level, there's a candlestick which is in green. That is how you find your entry. And that is what we call analyzing. Okay. The next thing that we look at is the Bollinger Bands. You can search for it here, Bollinger Bands. Bollinger Bands. You just search for it there.
Bollinger what?
Bend.
Bollinger Band. Band like a music band.
Oh,
Yeah, Bollinger
okay.
Band. Okay. And then what we have here with the Bollinger Band, what happened? Where did these other things come from? Let's remove all the indicators. Remove this drawing is from, remove all the drawings. You just search to go, you go on indicators, né? You search for Bollinger Bands. You select it. Né? I used it twice. Your internet connection is unstable. Let me check which Wi-Fi I connected on. Okay. I don't know why it's not showing. It's fine. Let me switch to MT5. You can also do this. Let me find any of the open chart. These are just tools. You go on view if you want to add tools to your MT5. né? You can add the line tools or the time frame tools, whichever tools you want. né? I want the dark version template. I want the dark version. You can simply right click, you go to property. The colors you can play around with them. Property, colors. I want in the background to have white, so you can set the background to white. Let's try that. Okay, good. Now the Bollinger Band, you can go on insert with the MT5 platform. Insert what we want to insert is an indicator. There are a lot of indicators that we have here. And then Bollinger Band is here. You can add it. We can right click on it and edit it, property of the Bollinger Bands. We can make it a bit big. Okay, yeah, like this. This one, it's believed that the price is supposed to be kept within the bands. né? The price is supposed to be contained within the bands. I don't think you're seeing my screen. Please communicate if there's something.
We can't hear
I
you.
will.
No,
We
you're not.
can't see. Yeah, now we
can't
can
see.
see.
Okay, I'll have to start over. I'll delete this indicator.
Now we can see.
Yeah, what you do is you on MT5 on the PC, even on the phone, the procedure is the same. You come to insert. What do you want to insert? Indicator. What indicator? Is it a trend following indicator? They are different. Oscillators and volumes and custom, it's fine, but for now it's a trend indicator. It's a Bollinger Band. You click on it, you select it. It's believed that the price is supposed to be within the band only, more like a stochastic. So if the price is crossing the band, it's supposed to go back inside the band. If the price is at the edge, this bottom and the bottom edge, the bottom band, the price should go back in the zone. So for example, here we have, if the price touches the bottom band, it's supposed to go back up. It's supposed to start buying. It will act as a support. If the price touches the top band, it should go down. It should act as a resistance, and so on, moving on. So what we then have after that is when you see the price is at the bottom of the band, you look for buying opportunity. When it's at the top of the band, you look for selling opportunity. That is a Bollinger Band. And then you have another indicator, the other famous indicator that we have. You can simply come here and try them out yourself. Another famous indicator we have, it's moving average. Yeah, moving average, most commonly used by a lot of technical traders. They just make it a bit bold. The period is the number of candlesticks you want it to calculate, because the moving average, it takes, maybe if you set the period at 10, it will take, yes. Utoni, can I hear you well? You're saying? Utoni, what are you saying?
No, I was saying the kids must keep quiet. Sorry.
Oh, sorry for that. Okay, this is the period, né? We have 10 candles here. The period, we set it to 10, né? The period is the number of candlestick, because it's called moving average because it takes a certain average. It's the number of candlesticks you want it to calculate, then it takes the average of it, like average speed or whatsoever. If you set it to 100, it will take the average, 10 candlesticks and take the average. And it makes more sense on a bigger, if the period is big, né? What will happen is, it shows you when the price is changing direction, meaning when the moving average is on top, it shows that sellers are in control. It's a downtrend. The trend is going down. Né? Sellers are in control, and you should start to look for buying, for selling opportunity. So when it crosses here, you will just be looking for selling opportunity. You look for resistance, you sell. Resistance, you sell. Né? And then it's called moving average crossover. It's a common trading strategy. Let's just try to reduce it to 50. It will make more sense to you. Let's push it to 80. You can play around with it. Just want a nice visible level. Okay. See, for example, when price crossed the moving average and went down, you start to look for buying opportunity. When the price goes, like now, we'll start to look, because the moving average is at the bottom. We'll start to look for buying opportunity. And then moving back here, moving back. See, here we're going to look for selling opportunity. The moving average was on top. When the moving average is at the bottom, you start to look for buying opportunity. So this moving average, it shows you where the wind is blowing, whether the wind is blowing up or the wind is blowing down. If the wind is blowing up, meaning the market is blowing up, the market is going up, you look for buying opportunities. When the market is going down, you look for selling opportunity because you will be at an advantage if you follow the trend. They say in Forex that they always say that the trend is your friend. So the moving average helps you identify the trend. Okay? Then the next indicator that we have, we have a lot. These are just the famous ones we are looking at. Let's look at the trend. It's the Fibonacci retracement. We go into the custom, we go to F. Not here. Let's look for RSI is one of them as well. How come it's supposed to be here? Let's look at the oscillators. I don't know why I can't see the fib retracement. No. Sorry. Pip retracement is not an indicator, it's a tool actually, but it also acts as an indicator. Fibonacci retracement, it's a tool that was developed by a mathematician. These are old traders that were living in the I don't know. A mathematician known by the name Leonardo Fibonacci, using the Fibonacci sequence. And it's very short, and it's very straightforward on how you apply it. You apply it in a trending market to look for levels where you can possibly sell or buy. For example, when the market is going up, it moves in this manner. It moves in this manner. Let's just go back to trading view. Okay, we come back here. If you want a clean white board on trading view, you just drag a bit on the price, then you push it up. You'll have a clean board. You'll have a clean board, like this thing. And then from here, the price usually goes up and down. It will go up, down, to go up again, then down, then it will go up, then down. So as a trader, you'll be very much interested to pinpoint this level where the price is, as the price, here you can tell that the price is trending up, it's going up. By this time, your moving average will be at the bottom here. Now what you want is like normal. The price comes back here, it goes up. The price comes back here, it goes up. The price comes up. When it comes down up to this level, where will it reverse for it to continue going up? This area will be an area of interest to you. You can search for it using a trend line. That is, you connect these 2 points, like we learned, using a trend line. Then just use a proper trend line. You connect these 2 points using a trend line, and then you'll be like, yeah, okay, now I know when the price will come to this trend line, I am going to buy. Another way you can identify this turning point is using by using a tool known as a Fibonacci retracement. What you do is you will take that tool, you will put it at the bottom, the previous low. In a market that goes down, it starts at the bottom, then goes up, isn't it? When you use that tool, you first start to put it at the bottom, and then you drag, you put it at the bottom, you will drag until at the previous low, and it's going to draw levels or numbers. This will be a 0%, this will be 100%. And then inside here, now this will be a 0%, this will be 100%, the other way around. And then this is say 80%, 20%. Based on that tool, the market always reverses at 61%, 61.8%. It will draw the percentages automatically. When the price comes to 61.8%, that is when you buy or you take your buying positions at the 61.8%. Okay, that is how you use that tool. Let's go back and search for the tool now. Okay, that is if you have to go back to the MT5 platform here. If we come back here, let's try to switch to just any time frame that we can easily identify this tool. Just a moment. Okay, let's identify a case where the price was going up and down. For example, here we have this case. For example, you can clearly see that the price was going down, then up, then down, then up, then down, then up, then down again, then up. So one of the way you can identify is that when the price was here, for example, when the price was here, you will realize it reversed, it started to go up, then it went down again. Then when the price was here, how do you know how far it will come before it will continue again? So you come on this platform, you look for that sign. That is the sign of the Fibonacci retracement. You will click it. Where is the previous low? This is the previous low. You will start to drag from the previous low to the top of the previous high that we have there. Meaning after you identify that the price is going up, you drag from this bottom. On an up market, most the price I said it starts from the bottom, it goes up. You drag from the previous identifier, from the previous support to the previous resistance, and the tool automatically draws percentages. So if you can see the 61.8 is here. When the price reaches here, we'll expect it to continue going up. So that is the use of the Fibonacci retracement. Yeah, we quite have a lot of tools. If you check here and indicators that you can use to identify where the price will go up and down. We cannot go through each of them one by one, but with time you can invest a lot of time in watching videos online to understand. But you don't need to understand this thing, trust me. You don't need to memorize or try to go deeper into this. We are not going to use most of these tools. We will use what is known as naked price action. Just pure candlesticks. Candlesticks will be our favorite with trend lines. The tools, yes, for the sake of knowing, but they don't really work most of the time. That is the problem. So we have better things that work most of the time that we're going to use. There are better advanced tools that works most of the time that we are going to use. But for the sake of theory and for you knowing the language of Forex, that's why I told you this. Yeah, but that brings us to the end of the session for tonight, unless you have questions. Our next session will be on Monday, and then Tuesday, then Thursday, Wednesday, and the whole of next week we are going to have lessons. In that one, it's a pinky promise. I will not wish to break it. You really have suffered of waiting. All right. Any questions on what we've covered? Or are we fine?
I wanted to ask,